in sound money terms, it has a much higher stock to flow. And so it's not really that good of money compared to gold, which is why gold is kind of, the gold silver ratio got so high because gold is a much better form of money. I mean, one thing about silver is it's damn big and it's damn bulky. I mean, store a lot of value. I mean, you can get a couple $1 million of gold and put it in a briefcase, a briefcase maybe will hold $40,000 worth of silver. I wrote a book about it. I'm a strong believer in Bitcoin. Bitcoin, in my view, is digital gold. Digital gold will ultimately catch up with and surpass analog gold. But as I've always told all my Bitcoin friends, guys, this is a process and it takes years and decades. I mean, gold's got a 5,000-year head start. And the average person, when they think inflation protection, they think gold and silver. They don't think Bitcoin. They don't even know what it is.
Lawrence Lepard doesn't compare Bitcoin to gold to sound provocative. He does it because the setup looks eerily familiar. When gold entered its greatest bull runs, it wasn't driven by hype or speculation. It was driven by a slow, creeping loss of faith in paper money. That same erosion is happening again, and this time, Bitcoin is stepping into gold's old role. Lepard begins with silver, a reminder that not all sound money scales. Silver's bulk makes it inefficient at higher values. You can store millions in gold inside a small case, while the same space barely holds a fraction in silver. Gold won that battle because it could absorb global wealth. Bitcoin, Lepard argues, takes this one step further. It doesn't just store value efficiently, it eliminates physical limits entirely. With a strictly capped supply and frictionless global transfer, Bitcoin resembles gold at the precise moment gold broke free from decades of stagnation and entered its most powerful monetary revaluation. Back then, most people didn't believe. Gold had thousands of years of trust, yet it still took a crisis of confidence for the bull market to ignite. Bitcoin is earlier in that same arc. Misunderstood, dismissed, quietly absorbing believers while institutions hesitate. Lepard believes this phase unfolds over years, not months, exactly how gold's biggest bull runs began. So the big question is, if Bitcoin is now where gold was before its greatest bull market, will you recognize the phase, or miss it the same way the world once missed gold? Let's take you back to Lawrence Lepard's explosive analysis on the relationship between Bitcoin, gold, and silver, and what awaits the crypto market in 2026. Please like this video, subscribe to the channel, and turn on post notifications for more content. Thanks for tuning in. Enjoy the rest of the video.
The point I guess I'm trying to make is that there's something going on here, and I do think there are some banks and others that are probably on the wrong side of this trade. And I do think that, the exchange, some people say the exchange upping the margins, and by the way, the 30% margin increase, they've only done that one other time before. That's a big increase. And some say, well, they're just protecting the exchange, and that's somewhat true. But it is, as you say, similar to the playbook they used in 2011 to knock the price down, where they jacked the margin rates up quite a bit. The thing to keep in mind, though, on margin rates is it affects both sides. It affects both the longs and the shorts. So, the shorts have got to put up more margin too. And so it tends to affect whoever's the most levered. And arguably, the shorts are more levered than the longs. I mean, in many cases, the people who are buying the contracts long actually would be willing to stand for delivery, or they're doing it to hedge it because they have a legitimate business need for the silver in the future. And in fact, that's one of the things that makes this so damn interesting compared to gold or compared to Bitcoin or some of the other monetary substitutes, is that you actually need this stuff.
Right.
We're not using a lot of gold fillings anymore. Gold doesn't go into electronics very often. There's some places it gets used because it can't tarnish, but silver can. But the fact of the matter is the world needs a lot of silver. We mine 800 million ounces a year. We use more than that. We melt down some of the old stuff in scrap. There's a coin dealer near my house where I go, and I see all the old tea sets that the senior citizens bring in when they're running out of money, and they sell their tea set at some fraction of the value of the underlying silver, and he sends it off to a refiner who melts it. And the demand on the solar side and on the battery side, is growing substantially. I've seen numbers that suggest that if solar demand in China continues at the rate that it's now going, China would absorb 60% of the world silver production within a few years, right? And now you've got Toshiba coming out with this solid state battery that uses a lot of silver. And, if you do the projections on that could absorb a lot of supply in the future. So you've got these things, and there aren't stockpiles of it sitting around. There's a lot of gold sitting around. You set the price high enough and gold will come out of the woodwork. Women will melt down their jewelry. But with silver, there's not a lot of it laying around other than in T sets. And so,
how many T sets are there really left around, right?
Well, I don't know. I chat GPT'd that. There's actually probably a couple billion ounces of T sets and silver junk out there,
candlesticks and stuff like that
Yeah.
But it's not the asset for the past 2 generations. It's not been the asset it was before.
No,
where every house had a silver set.
Yeah. I mean, people have really forgotten about it, and that's the other thing, Adam, I think is going on here, and why this breakout is so violent and has potential to go quite a ways, is that for basically, this is the only commodity that for almost 40 years has not really exceeded its all-time high. It was capped at $50, and so it would trade between, I don't know, as low as 11, in the COVID crisis, briefly, and 50 as a high, and it traded in that range for a long time. I mean, I took delivery of 10 COMEX bars way back in the day at 1,000 ounces a piece. It bottomed out my cars. I put them in the trunk of my car and it bottomed them out. And and at the time, I think I paid 5,000. Yeah, I was paying $5 or $6 an ounce at the time. So I paid $5,000 a bar. Well, like 10 bars there's 70 pounds a bar basically.
Wow.
So that's 700 pounds.
I hope you still have those bars. You must have been buying this back like in the early 2000s?
Just in the 80s. Yeah.
Okay.
80s, 90s. Yeah. I still do. So, and at some price they'll get, they'll enter the supply side of the equation. But yeah, it's a funny metal in that respect. It's got these 2 roles. It's got this monetary role, but it's also got this industrial use role. And the industrial people, they're there and they need it. And people say, well, the price goes high enough, there'll be substitution. I know somebody was talking about maybe copper replacing silver in solar cells. I don't know if that technology is real. I mean, silver is really, it's the best conducting metal in the world by far. And it's got a lot of uses. And it's generally a small piece of the value of any particular thing. I think there's probably some silver in your iPhone, but it's probably such a small amount that even if it doubled in price, it wouldn't really move the needle on your iPhone price, right? So, yeah. So it's a funny thing. So where do I think it's going? I don't know. I think we're going higher. I mean, that's my gut is we will see 100, we'll see 125, we'll see 150, maybe we'll see 200. I don't really know, and I don't really know how these banks and the COMEX and all the people who've sold all the paper are going to kind of escape from that trap. I mean, I actually kind of worry a little bit about maybe someday there being a zinc-like solution. I mean, the China's declared it a critical metal, and they've said that they're going to have export restrictions, and making it sound like it's going to be zero, but it's not clear. They could still sell some. And the US has declared it a critical metal, and it goes into a lot of defense-related things. And so, there could come some point in time when, we could 6102 it, which, that I'm referring to the grabbing the gold back in the 30s. I mean, if it goes too far too fast, and you could see a government saying, hey, we're not going to permit this. We're going to cap the price of silver. We're going to buy SLV and cash everybody out in dollars, and take delivery of those ounces, and this whole thing is solved. I mean, that kind of thing is a possibility, which is why I've always advocated actually holding the metal versus having any kind of paper claim on the metal, which is what an ETF is.
Right. And just to be super clear, I don't think you suspect the government will confiscate silver from households, but it would go like Willie Sutton, why do you rob the banks? Well, that's where the money is. It will go where the silver is, which is the massive ETFs, and just say, hey, we're nationalizing it.
Exactly. Just say we're nationalizing these ETFs, and we're going to pay you the cash on the barrelhead, whatever the last trade was. We'll pay it. Right. The next day, the opening trade would be much higher, and those of us who have coins and bars would be thinking, oh, that's nice. Our stuff's going up, and if you had the SLV, now you've got a piece of cash. So, yeah. I don't know. I mean, it's interesting, Eric. Adam. I don't want to speculate on anything because you just don't really know. But I do have a very strong, based on 30 years in this business, watching it, listening to all this, knowing how the other side operates. I have an extremely strong suspicion that somebody's in trouble on the short side, and that this is going to get squeezed much higher, and that shorting it here would be suicidal. Going long it here, I think probably works for a while, but you might have to be nimble. I mean, it could run up to 200 and correct back to 100, right? I just don't know.
The key issue shaping Bitcoin's price mirrors what's quietly happening in silver today: structural tightness colliding with leveraged positioning. In silver, many financial players remain heavily short, and sharp tools like sudden margin hikes have historically been used to force price pressure. These moves hurt everyone on paper, but the most leveraged side always breaks first. That lesson matters for Bitcoin, where repeated liquidity shocks, forced liquidations, and regulatory stress tests have steadily flushed out weak hands, leaving supply increasingly concentrated with long-term holders. Silver's market shows what happens when real demand refuses to disappear. Annual supply hovers around 800 million ounces, yet industrial use keeps rising, from solar to batteries, forcing recycling to fill the gap. Bitcoin faces a parallel dynamic, but with an even harder constraint. Its new supply is mathematically capped and shrinking, while demand expands from institutions, ETFs, and sovereign actors. Unlike silver, there is no recycling mechanism for lost or tightly held coins. Both assets share a dual role. Silver is money and metal. Bitcoin is money and network. In both cases, tiny per-unit usage is hard to substitute and barely affected by price. The difference is scale. Silver strains under physical limits, while Bitcoin absorbs global demand digitally, setting the stage for a far more dramatic price reckoning in 2026.
Where do you see gold going in the coming year? Do you see it continuing to power higher or taking
I definitely think it's going to power higher, and it has not been a parabolic move. It's been a strong move. And gold to me just reflects the loss of faith in fiat currencies and what happened post, our grabbing the Russian assets. And so, I sincerely believe we are in a, secular bear market for fiat and a secular bull market for real things, including gold, silver, real estate, Bitcoin. Well, Bitcoin's a synthetic thing, but it's real in terms of the algorithm being limiting its supply. And therefore, my sense is that gold goes higher. I mean, I put it at 5,000 or 6,000, maybe the end of next year, and I don't think a $10,000 or $20,000 target is out of the question. If you look at historical bull markets in gold, what they've done from the bottom to the top. I mean, if we call the bottom, you can call the bottom either $1,000 back in 2015, or you can call it a more recent bottom, kind of the 2,000, 3,000 area. To my view, we're still in the second or third inning here. So I'm quite bullish on gold. It's interesting too. And then this is, tooting my own horn, Adam. I mean, I'm really bullish on the miners. I mean, the miners are up a lot this year, but not as much as they should be, given how much the metals have moved, particularly silver.
Yeah. What's the why behind that, do you think?
Well, I think it's a tough business. And the miners annihilated a generation of investors between 2011 and 2015, and I was one of them. It was damn awful. And as a result of that, there's I call it the battered gold bull syndrome, battered gold stock bull syndrome. And it was just so awful and so ugly. And the businesses are such a tough business that, in spite of the fact that the metal is going crazy and the margins are 60% plus, we're still looking at companies trading at 5 to 7x cash flow when, the big triple Q companies all trade at 50 times or 20 to 50 times cash flow. And, they're both making cash, and a business is a function of its future cash flows. And so, now some of those triple Q companies are monopolies, and so they're probably more defensible than some of the miners are, in the sense that, this is a commodity. But they really, in my view, we're still kind of in the third inning for the mining shares. And although my fund is up a lot this year, I think we'll have a pretty good year next year too. And I think one way, if you feel late to buying the actual metals and you're willing, to size it appropriately so you can handle the volatility, I still think just buying the mining ETFs is not a bad idea. And then more specifically, I pick companies within those because I think, there some companies are better than others. But
right, the ETFs have a lot of. I mean, there's a lot of dogs in the mining.
Yeah, they almost they're weighted average. They're based on the weight and the valuations, and some of them are incorrect. So,
what are your thoughts about Bitcoin going forward from here? Has it peaked, or is it just consolidating?
Oh, no. Bitcoin. I wrote a book about it. I'm a strong believer in Bitcoin. Bitcoin, in my view, is digital gold. Digital gold will ultimately catch up with and surpass analog gold, but as I've always told all my Bitcoin friends, guys, this is a process and it takes years and decades. I mean, gold's got a 5,000 year head start. And the average person, when they think inflation protection, they think gold and silver. They don't think Bitcoin. They don't even know what it is. And like so many people, like the guy I was just at the gym with this morning, he said to me, well, yeah, I was going to buy it, but Trump coin came out and I think all that stuff's bullshit. And he's right. Trump coin is bullshit, but Bitcoin's not. Bitcoin's an algorithm, and it's a protocol that's going to, in my view, continue to grow. So on a relative basis right now, if you look at the Bitcoin gold chart, Bitcoin is a screaming buy in gold terms. And some people, the gold people say, well, therefore, and Peter Schiff and others say, yeah, in fact, it's a screaming buy because it's going to go to zero. Mm-hmm. And I just don't believe that. I think Bitcoin is going to be just fine. And it's so funny to me, Adam, because this kind of reminds me back in 2023 when Bitcoin was soaring and gold was doing poorly. Everyone thought, oh, this is new digital gold and silver are dead and they're never going to live. And those miners, they suck and blah, blah, blah. And Bitcoin was the bright, shiny thing, right? And right now, and nobody wanted any gold and silver, of course, and I hung in there managing my fund, believing they would ultimately work. And right now, gold and silver are bright, shiny things, and they're working great. And everybody who's in them is growing, and I get it. I'm in them too, and I'm happy that they're working. And Bitcoin's kind of a dog, and people are blaming Saylor and MicroStrategy. And to me, it's just a screaming opportunity. I mean, I look at MicroStrategy today. That stock's a 10-bagger in the next 5 years, in my view. And I'll be buying it, with silver and gold proceeds here next year. So,
well, that was a question I was going to get to. Are you shifting any gold into Bitcoin?
I am at the margin. Yeah, at the margin. I mean, I think I made it pretty clear what my weightings were. I think coming into this year, I was about 70% Bitcoin, 30% gold. Well, guess what happens when all the gold stuff doubles in value? Because that was gold stocks, and my fund is up 150% year to date, 148 through November, and I think we're up 10% this month. So, we're going to be up 150, 160% this year. And so,
congratulations.
Thank you. I mean, it's not that much better than the averages, by the way, which is a little frustrating to me, but full disclosure. But the point is that, you take that, you do that in 70-30 Bitcoin gold, you hold the Bitcoin flat, you double the value of the gold. Well, now I'm probably 60-40 gold Bitcoin. And, so I will be lightening up on some of those gold stocks, not selling them all, not dumping gold. But I mean, this is, to my way of seeing it, this is what a professional investor does. You try to buy what's cheap and out of favor, and you try to sell the things that are screaming. And, I think they're going to keep screaming, but I also think that on a relative basis, Bitcoin and MicroStrategy are probably better bets right here, even though they don't feel that way. And, your show talks about this a lot. I mean, sometimes in investing, what feels uncomfortable is what's right. And what feels comfortable and obvious actually turns out to be wrong. And right now, it might feel really comfortable and obvious to be in silver and gold mining stocks. And, I think we've got another good year or so here for sure, but I don't think Bitcoin's dead, and I think it's relatively cheap. And keep in mind that the underlying theme of the book and of what you're talking about, what I'm talking about is, there's, call it $900 trillion of financial assets out there. Gold, stock, bonds, everything, all including real estate. So actually, there's 450 if you just do the financial, take the real estate out. Well, the total Bitcoin marketplace is 1.8 trillion and the total gold marketplace is 30, but really only about half that gold's available for sale because all the rest is either in jewelry or in a museum. Mm-hmm. And so it's really about a $15 trillion market. Bitcoin, call it a $2 trillion market. That's 17 out of 450. And that 450 is growing, and it's probably about to grow a lot more rapidly because the Fed just started the pivot, which is what is my friend Lynn calls the gradual print. She's right. It's gradual so far.
Gradual print.
But I think it's going to morph into the big print. And I wrote a book about it, obviously. And, because mathematically it has to. And so I think as it does morph into the big print, all these sound money alternatives, real estate, gold, silver, Bitcoin, they're all going to go higher. And
Lawrence Lepard stated that he expects gold to keep rising because its move so far has been strong, but not wild, and he sees it as a reaction to fading trust in fiat currencies after actions like freezing Russian reserves. He argued that the world is in a long bear market for paper money and a long bull market for real assets such as gold, silver, real estate, and Bitcoin, noting that Bitcoin is real in this sense because its code strictly limits supply. On that basis, he suggested gold could reach about $5,000 to $6,000 by the end of next year. He also stated that he does not rule out much higher prices if this cycle resembles past gold bull markets. Lawrence Lepard further argued that gold miners remain undervalued. Despite big gains, many still trade around 5 to 7 times cash flow, even with margins above 60%, largely because painful losses from 2011 to 2015 drove a generation of investors away. Lepard added that he does not think Bitcoin has peaked, views it as a strong buy versus gold, and sees MicroStrategy as having major upside, so he has started slowly shifting some gains from gold stocks into Bitcoin-related positions. As we conclude, given everything Lawrence Lepard said about gold, silver, and Bitcoin as forms of sound money, which of these would you personally trust most today to protect your savings from inflation, and why? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.